Well, thank you for joining us, of course. What kind of sales are you looking at going forward? What's the kind of demand you're seeing?
Well, at the moment, demand is actually holding up very well indeed. As you probably know, we've got to raise 167.5 billion in this current financial year. We're nearly a quarter way through the financial year. We will be at the end of this month, and we've now raised approximately just under 25% of the total amount. So very much even flow throughout the year.
And where are you seeing the demand from in particular at the moment? Is it foreign investors or is it still the pension funds?
It depends very much what it is that we're actually issuing. So for instance, when we issue in the shorter end of the curve, as we did today with a 5-year auction, we probably see the widest sort of demand from foreign investors, overseas investors in the short end, also from the banking sector as well, and from fund managers. But then the longer you go out to the long end, and for us especially in the very long end, that's where the pension fund industry tends to dominate the investor base.
And have you been seeing more overseas investors as a result of the Greek issues? Is that something that's been affecting in particular, or is it something that is almost leaving us alone?
It's interesting, we have received anecdotal evidence that overseas demand has been quite strong, and that we've also been the beneficiaries of safe haven flows in particular. But I say that's more anecdotal rather than hard evidence. The most recent statistics, official statistics that we have, suggests that overseas demand is actually at an absolute all-time high in nominal terms. It's approximately 31% of the entire Gilt portfolio. So we think it's probably holding up quite well against an uncertain backdrop.
And do you know what kind of breakdown within that overseas investors you're seeing? You know, are you seeing flows from Asia at all? Or?
I mean, they are strong flows from across the world. We don't have precise information on exactly who every individual buyer is, and we would also want obviously to respect confidentiality there. But I think it's probably fair to say that it's from official institutions in the wider sense, so not just central banks, but also sovereign wealth funds across the globe, but also overseas fund managers as well, investment managers, quite strong in the gilt market nowadays.
Okay, and we've got a 2050 linker coming up in the very near future. Why such a long duration?
Because it's the sort of thing that the pension fund industry in particular has strong demand for, and the pension fund industry is a very core part, an important part of our investor base, and we try and satisfy that demand.
And what kind of progress are we seeing towards a CPI-linked debt rather than the RPI?
Well, what we've said as far as CPI is concerned is that we will be consulting with the market in the near future, in due course, on the introduction of CPI-linked debt, whether that's something that the market wants, all these sorts of questions, we will be asking the market in good time. But we flagged that already at the time of this year's budget back in March, and we've made clear that in terms of timing in general, we're not minded to do anything in a rush. We really do want to see what it is that the market actually wants as far as CPI is concerned.
Well, I was wondering what kept you awake at night and what kind of worries you had.
Well, we're always mindful of the potential for spillover from other parts of the world, other markets that could affect our market and cause volatility in our market. Just because we are, if you like, separate and because we're a sovereign issuer in our own currency, that doesn't mean that we're not affected by what happens in global markets generally. But at the moment, we're not too concerned.